Welcome back, ladies and gentlemen, to the second edition of Adoption Review within the Lighthouse Report. This month is incredibly valuable, in my opinion, because we are going to be talking about the tie-in of digital currency and cryptocurrency, or digital assets and cryptocurrencies, into the SWIFT payments messaging system. If you're not aware, maybe you are aware because recently we've heard talks about, Russia with sanctions being cut off from SWIFT, et cetera, et cetera. But just to give you a little bit of a breadth of scope of how big SWIFT is and how much volume flows through SWIFT from a money standpoint on a daily basis, 33.6 million transactions per day. There's more than 11,000 financial institutions. You can think of all the central banks. You can think of all the banking organizations pretty much globally that are tied in. $5 trillion as of 2015 every single day was moving through SWIFT, which equated to $1.25 quadrillion. I would assume that this number has increased from 2015. What we really want to talk about, though, is the integration with cryptocurrencies into this system. Now, MT300, 304, 305, 306, et cetera, are dealing in basically foreign exchange. Now, when you're dealing in foreign exchange, you may have illiquid currencies on the front and back end of transactions. Let's say I send $1. If I want to send you $1 from the United States into Argentina, whatever the Argentinian peso is, it might have issues going on with volatility or illiquidity, whatever that may be. This is what we're talking about, though, right now. Add support for confirming and setting non-deliverable foreign exchange trades and options in digital currencies, aka cryptos. We'll get into that in a second, that do not have ISO 4217 currency codes. So, adding an initiative in where you can have non-deliverable trades flowing through digital assets. We'll talk about non-deliverable trades as well. But ISO 4217, so it's talking about digital currencies not having 4217 currency codes. ISO 4217 currency codes are essentially what we would deal with the USD, the Euro, Afghanis, the Zambian Kwacha, whatever you want to talk about from a national currency standpoint. And they're talking about digital currency. Along with that, and this is all published July of 2022, by the way, I should note. And this is all going live in November of 2022. Blockchain wallets tied into these MT500, 501, 510. Now, this is basically for the integration of a new asset within a platform, the ISO code or the MT500, 501, et cetera, et cetera. So, along with that, and I know this is a little bit heavy, so bear with me, July 22nd, they're publishing along these MT 300, 304, 305, 306 for foreign exchange. They're tying in digital token identifiers for a non-deliverable trade, which we already talked about, between a national fiat currency and a digital token. This digital token identifier may be an ISO 24165 identifier. What is an ISO 24165 identifier? Well, we just saw DTI. The DTI Foundation, back in October of last year, proactively issued identifiers for the top 100 cryptocurrencies by market cap, thereby enabling all major cryptos to be tracked, including Bitcoin, Ethereum, Tether, and Ripple's XRP. Well, it's just XRP, as we know. But talking directly about ISO 24165, the interesting thing within this is essentially talking about the digital token identifier being a key building block to upgrade the financial market plumbing to process digital asset trades safely and with appropriate oversight. They're talking about cryptocurrencies along with other digital assets, ladies and gentlemen, and it is massive based on the volume flows that might be involved in some of these. Now, it's obviously going to start slow, but that integration process is already occurring. Now, we did see non-deliverable payments. I believe this deals directly in non-deliverable forwards. To give you a brief overview of this, this essentially is saying, or the use case behind this would be if a country's currency on the front or back end is restricted from moving offshore, it won't be possible to settle the transaction in that fiat currency or national payment currency, USD, Euro, whatever it might be, with someone outside the restricted country. However, the two parties can settle the non-deliverable forward by converting all profits and losses on the contract to a quote-unquote freely traded currency. They can then pay the profits or losses in that same freely traded currency. Also, non-deliverable forwards could be utilized for parties looking to hedge or expose themselves to a particular asset, but who are not interested in delivering or receiving the underlying product. Now, this is confirmed through a European Central Bank document that came out in June. This is the standards release for 2022, talking about SWIFT again. It's talking about adding support for non-deliverable trades in digital currencies. Oh, wow. You can see Bitcoin used as an example right here. Treat trade as an NDF. Mnemonics to be defined. ISO 24165, which we just talked about as an optional description. And we can see, obviously, for example, USD versus Bitcoin. And up above here, which I also delve into a little bit within this month's section, SWIFT's securities clients are looking to leverage the potential of a new USD $24 trillion market by 2027, advancing a collaborative experiment to connect tokenized asset platforms. Tokenization, digital assets, cryptocurrencies, all of these things are obviously intermingled. They're saying that they're working together with ClearStream, Northern Trust, and a major global custodian. We'll go into that in a second. Demonstrating the feasibility of harmonized access and orchestration for tokenized assets through SWIFT, showing tokenization, detokenization, and delivery versus payment settlement, including movement over multiple token platforms. $24 trillion market by 2027 dealing in tokenization. Well, if you're not aware, the digital asset market, cryptocurrency market, peaked at right about $3 trillion in 2021. Even if some of those volume flow through crypto, you're talking about something similar to what we've already seen. This market continuously grows stronger because more and more adoption is occurring, and this is just a drop in the bucket with SWIFT initiatives. Talking about that tokenized asset pilot through SWIFT, we can see in this European Central Bank document, they talked about ClearStream and Northern Trust. Well, Settle is also involved in this. Now, Settle was actually acquired recently by Collab, which I talk about in this article as well. And Collab plans to launch a native token in 2023. So we will certainly be paying attention to that. But not only with Northern Trust and ClearStream and Settle, Northern Trust has been busy recently anyways. Standard Chartered and Northern Trust announced Zodia custody with an FCA or Financial Conduct Authority registration earlier this year, July 13th, right? Well, this is talking about institutional grade custody of cryptocurrency assets. They've been very busy as well. Zodia, which we just talked about, custody bringing Fireblocks network to their customers. This is May 25th, 2022. The entire asset base of liquidity partners within Fireblocks, which is massive, trading venues, lending desks, etc., are now going to be accessed or able to be accessed directly through the Zodia custody wallet. Talked about this last month in the first free edition of the Lighthouse report. Fireblocks features and integrations. Certainly interesting to look through some of the protocols that they are supporting. You can see XRP, you can see Avalanche, you can see, I'm not curious, yeah, they have Quant. They obviously have Bitcoin, Ethereum, etc., Bitcoin Cash, Satoshi's Vision, all of these different things. And I would very much so pay attention to Fireblocks because they have some heavy hitters. We know that Jay Clayton sued Ripple the day before he left office, and he left office preeminently about 2 weeks prior to the end of his tenure. He is on Fireblocks' high-level regulatory advisory board, along with some other very, very heavy hitters, and Fireblocks is actually framing themselves as the quote-unquote SWIFT for crypto. Last but not least, I want to talk about this. This is from the Boston Consulting Group. What does the future hold for crypto exchanges? And there are some very, very, very interesting charts and facts within this. I'll just go over a couple. Number one, they're saying that the crypto economy is here to stay with increased utility and maturity. You can look at 2017 and 2018. The percent of institutional trading volume on Coinbase was only 20% in 2018 Q1. In Q4 of 2021, that institutional trading volume, which is banks, institutions, financial institutions, whatever you want to talk about, is 68% of the volume. But even leading down a little bit lower than this, the adoption curve, they're basically saying that in 2022, we are essentially at where the internet was at in 1998. And I was talking to a friend of mine the other day that said the internet didn't have the internet to benchmark off of. So the growth cycle of digital assets and cryptocurrencies are going to be accelerated because Web3, which is, dealing in crypto essentially, has Web2 to build on the backbone of, or on the back of. The internet didn't have that. They didn't, Web2 didn't have Web2 to build on the back of. And we're at the point right now where you're going to start seeing crypto organizations or crypto projects or maybe even digital assets that represent the Tencents, the Googles, and the PayPals of tomorrow. By 2030, they're expecting 1 billion users to be utilizing cryptocurrency. And in 2030, the crypto market will only represent where we were at in 2006 with the internet. Just interesting facts. I mean, this is all kind of assumptions here. And last but not least, institutional adoption is on the rise and becoming more diverse in crypto. So this is 2021's cryptocurrency assets under management from an individual investor, hedge fund and venture capital standpoint, corporations and bank standpoint, government fund standpoint, and pension fund standpoint. 713 billion from individual and total 2021 assets under management across the board in the entire globe, 263 trillion. We are just at the beginning. You can look at all of these different things. Pension funds, 61 trillion tied up in pension funds in 2021. Only $1 billion tied up in pension funds dealing in crypto. Just step back, ladies and gentlemen, and understand where we're at. This adoption is occurring. It's occurring at breakneck pace. However, it doesn't seem like it is whenever the market's boring and we're kind of in the doldrums of a bearish trend in the market, et cetera, et cetera. But you can see the future outlook from Boston Consulting Group in every aspect of cryptocurrency starting to swallow assets under management or incorporate assets under management from these different funds or different individuals or different corporations and banks or pension aspects. They're going to start integrating and involving themselves with crypto. It's just the beginning, and I'm glad to be here providing this information for you in a free way. I think it's really, really valuable, and I hope that this provided a little bit of insight to you on just how much adoption really is occurring from a high level. Next month, I'd like to get into some individual projects again, but the Swift announcements I felt dictated an important enough announcement to or sneak peek about where we may be in the near future. So I hope you guys enjoyed this, and I will talk to you next month. Thank you.